All right. Well, if you were looking at the market on Friday, um, you would know that it was very, very bloody and red day. I said that Friday would be quad witching, which means that essentially all of the options across um every single type of option was going to expire on Friday. So whenever that happens, there is a lot of volatility in the market. So as you can see, the SPY was down 1.67%, the QQQ was down 0.78%, and the biggest loser was the IWM down 2.27%. Yeah, we're just gonna go over the charts for all of these different indices. We're gonna go over the charts for all of crypto, the dollar, the 10-year yield, everything, and all of the different stocks that you guys wanted me to do technical analysis on. So without further ado, let's get right into it. Okay, number one, the SPY is oversold. It's basically creeping outside of the lower level of the B band, which means that usually when this happens, we do see a bounce to the upside. All right, because this is the lower level of the B band, shows the lower standard the negative standard deviation away from the midpoint, which is the 20 exponential moving average. So when we are overextended to the downside, what happens is we want to return to the mean. But we can see that the one time this didn't happen, basically this happened, right? But this was the only occurrence out of 10 times prior that we didn't return to the mean, but we just continued on higher. Okay, so as you can see here, we're trading outside of the lower level of the B band. We return up sharply, right? We clearly made a sharp rebound. Similarly, again, on the 19th of May, we fell outside of the lower level of the B band, and we sharply came back to we sharply returned back inside the B band. Okay, so now we're coming to that point again. We're exiting the lower level of the B band, which can signal a return back inside. Okay, so levels that we would need to watch is, first of all, if we want to look at that, right, we would need to watch the B band. Literally, you just go to TradingView, you add an indicator, Bollinger Band, and you just click the first one. It's very, very simple. We would need to monitor the Bollinger Band, all right? And the levels that we would need to watch on the SPY are 414. Yeah, okay, so 413.71 and 410.60. Sorry, 413.69 and 410.60 are the two levels of support that we would need to watch on the SPY. If we get down here at if on Monday or on Tuesday we fall down to 410.58 and we are still, very, very overextended to the lower side of the B band, I am going I'm going all in on calls, all right? Because whenever this happens, this is just a beautiful opportunity to buy into calls. But we were wrong here. This was literally this trade where we fall outside of the lower level or we go above the upper level of the B band. On the SPY specifically, it's worked 9 out of 10 times in the past year and a half. Yeah, the one time that it didn't work was right here, back in April when the SPY was crossing 400. And that was a very extreme time in the market. So now let's see if this is also a very extreme time in the market, and we end up just continuing to fall and vomit outside of the lower level of the V band. But again, I don't think that that could happen because, there's still promises of buybacks. The Fed is not tapering off of their, buying back of securities. So overall, regardless of how bad the economy is, the stock market is going to continue being held up by the Fed's hundreds of billions of dollars, as well as all of the money being printed and given to corporations and banks, etc. So they could just buy all of these shares of everything much cheaper if they fall out of the lower level. If this were to happen in a bear market, so for example, if we go out of the upper level of the B band in a bear market, that is a much worse sign. But we went outside of the upper level in a bull market. So that's why we continued. All right. When it happened here, we had a bit of a pullback and then we fell sharply, right? But then we rebounded and we fell sharply again and rebounded once more and made new all-time highs. So we just need to continue monitoring these two levels of support. Overall, unless something happens on the macroeconomic side where the Fed is saying that they're going to start increasing interest rates much sooner than they agreed to a few days ago, or if they say that they're going to start tapering back on asset purchases, those would be the only two things that I can think of that would really destroy the market and bring it back all the way down to like 400, for example, in the short term. But otherwise, all of these dips have been bought up overall on, stock market. So there's my analysis on the SPY. Let's go on to the QQQ. So the Nasdaq obviously held up much better than the SPY, right? We still, we're still trading above these three important support levels: 340.76, 339.33, and 338.22. We're still trading well above all of those levels. So as you can see, a few days ago, we were extremely overbought out of the MACD, all right? But now, because we've consolidated, which is what I've been saying hopefully would happen, we consolidated around these prices. The MACD now became oversold. So now, literally, if these levels of support hold, then because the MACD is to the lower side, it means that there's more room to the upside. Over here, when the MACD is overbought, what usually happens with price is the price falls in conjunction with the MACD, right? But as you can see, let me give you an example. Back here, when the MACD was extremely overbought, oh, bad example, sorry. We would have to scroll back. All right, here, for example, the MACD was extremely overbought. Price was at a top, and the MACD started to cross below, and the price also started to fall, right? So things like that, literally that's what usually happens. The MACD over here, back in early May, mid-May, it was very oversold, and we bounced back up, and the MACD started going higher. All right, so basically, when the MACD is oversold below the yellow MACD line, that is a good indication that we can continue on higher if these support levels hold. And the fact that we are still in a very bullish formation, this is a bull flag. This is a very bullish formation, and we're still holding above the support levels while the MACD is oversold now. So it gave time for the Qs to consolidate a bit, to create somewhat of a foundation, to cool off the MACD. Like I've been saying for the past few days, we needed to cool this off, and now it's really beginning to happen. We're extremely we're oversold compared to where we were before. So this is a very, very bullish sign, in my opinion, on the Nasdaq. And the level that we need to watch is 340.76. If that can hold, we get a touch around there and bounce back up. That is beautiful. But we need to key off of the SPY and the IWM as well. All right, so now let's look at the SPY's MACD as well. You can see the MACD on the SPY is much, much more oversold and compared to the Qs. Okay, so if the Nasdaq can continue rallying, there's a strong possibility that the SPY will just continue following the Nasdaq. And there's my analysis on the Qs. Let's go into the IWM. The IWM was the biggest loser. Why? Because the dollar showed a lot of strength, because the Fed said that they would not be increasing interest rates for the next few years, which means that banks would not be profiting as much as they potentially would. If the Fed said that they were going to increase interest rates next year, then the IWM would start rallying and the Nasdaq would actually start falling. But because the Fed isn't increasing interest rates, it means that there's less money in the bank's pockets. And because there's less money in the bank's pockets, the IWM took a hit, because the IWM has many financial stocks in it, in the ETF. Okay, so, but what it did do, as you can see, it is extremely oversold as well. Similarly to the SPY, it held the 50% fib level at 220.87 very well. So it held 220.87 very well. We need to see if that holds. But, you know, given the overall weakness and the strength in the dollar, I'm not sure if that happens. But 220.87 needs to hold. And then the next level that needs to hold is 218.11 on the IWM. But overall, this is still in any other, literally in any other type of market. If we were creating a bull flag and we retraced back to the 50% fib level, or even the 61.8% fib level, that's still a pretty bullish situation. But because we are in much more different times, you know, a retracement down here is like almost unseen. One other thing that I want to do real quick. So I just drew a new fib level and I hid the other one. And with this new one from the bottom of May 12th to the top of June 9th, we can see that we did cross below the 50% and we are coming close to the 61.8% fib level. If we can remain above 216, we are still in a bullish situation. But obviously we need to see a bounce above, you know, the 61.8% fib level at 220. If 220 holds, then, you know, things still look pretty good. But overall, you can see that the lower level of the B band on the IWM is approximately at 219. We need to see if this continues to go higher on Monday as the price averages out and we get a you know, the standard deviation to the lower side increases and goes higher depending on the 20 exponential moving average. But we just need to maintain above 218 in the short term. But I mean, overall, obviously, honestly, we can fall down to like 215 in one day and then bounce back up to 222 the next day. So I mean, yeah, I mean, these are just the levels to watch on the IWM. 220, 218.11. What was the other one? And 228. Yeah, all right, 220 and 218.11. Let's just make it very simple. The other one that you would need to watch is 216.20. Okay, those three levels, we stay above those levels and we're golden. But other than that, then it would signal like the banking sector is just overall getting trashed. But yeah, that's no surprise because the dollar is extremely strong. But you have to take into consideration. All right, let's just go to the dollar real quick. The dollar on Friday absolutely crushed the day before's highs, and it just continued going on higher. So to assume that this move is going to continue happening, when you zoom out, you can see that it didn't really do much. There's still a long way to go to the upside. But in the short term, it might you know, it might retrace back to 91.3 or 91.6, but we would need to really watch to see how it responds now because we are extremely overbought. We rallied like crazy. The dollar got extreme volume and lots of buying pressure, clearly. The only way that the IWM continues to fall is if the dollar has this enormous upward move, which isn't as likely, you know? So we just need to key off of those three levels on the IWM. Overall, the dollar is extremely strong because, you know, interest rates are not going to be increased sooner rather than later. So yeah, overall, the longer term perspective of the market is bearish, and the Fed did not say that they were going to taper off of asset purchases. So that's why, yeah, the dollar is just overall much stronger than it has been before. But overall, this is a day trader's market. Swinging and swing trading is very hard because we are bouncing around up and down randomly throughout the throughout the days. And overall, if all of the levels that I give you, if we cross below a level, you can scalp it to the downside with puts. if we cross above a level, you can scalp it to the upside with calls. And literally all of it is just day trades. You would need to have a cash account so you can have unlimited day trades depending on your buying power. And at first, just trade lightly with one contract at a time and perfect your trading. And yeah, literally right now, day trading is king and you need to trade the levels. So I gave you the levels for the SPY, the QQQ, and the IWM. And yeah, just keep those in mind. Let's look at the SPX. The SPX is also at the lower level of the B band. The RUT, which is the IWM, also you can see that it bounced pretty nicely off of the 50% fib level, like it did on the IWM as well. And the NDX, very similar, also oversold and still holding up pretty nicely. So overall, this is a pretty bullish move still. Let's see. Yeah, and the through this trend line here, and the Nasdaq is still holding, the NDX is still holding above it, which is a good sign. Now we can go into Bitcoin, Ethereum, and the crypto market. All right, this is a logarithmic chart of Bitcoin, and that is the predominant way of looking at Bitcoin because of the exponential nature of it. I'm not going to go too much into detail about logarithmic chart or not, but just very simply, I clicked log, and here's the log chart. This level of support, on May 19th, we ended up breaking it, and that's when we ended up hitting the lows of 30,000 when we broke this level that day. All right, on the log chart. This was like the do or die support level. If we didn't break, we would fall. And that's exactly what happened. We ended up falling from all the way from 43 all the way down to 30 within a day. And so that's what it looks like on a log chart. All right. Now, when you go back to normal, okay, this same trend line is currently acting as support. All right. So on the log chart, it was acting as resistance. We broke down below it. But on the normal chart, currently, it's acting as support. So this is the usual chart that everyone looks at, non-log. So right now, there are three main levels of support. This trend line here, which is that same trend line of support from back in November, which is currently for today, the support that it needs to hold is 34,800. For tomorrow, it's going to be approximately 34,900. All right. So it'll approximately like add 100 per day, and we'll be monitoring this line. All right. The next level of support, which actually held pretty nicely today, is this trend line here at approximately 33,000 today. And it's going to be the low of 33,000 for the next few days. Okay. But the other big one is, as you can see, when we did make the lows on May 19th, we made another low and basically retested this on June 8th. So I connected a trend line connecting those 2 points, and we get this level here, this trend line here. If we break down below this trend line here, then I am going to look to buy Bitcoin again around 25 to 27,000. Okay. So the third level is approximately 31.5, 31.6, 31.7. It adds up about $100 per day. So for today, it is 31.6. Tomorrow, it'll approximately be about 31.7, and so on and so forth. So those three levels of support are extremely, extremely important on Bitcoin. Currently, we're bouncing above it, which is nice, but this is a very, very bearish pattern. This is a bear flag. Literally, this is exactly what it is. This is a bear flag. If you Google bear flag, this is literally one of the most bearish technical analysis patterns out there. And that is literally what's being formed on Bitcoin currently. So these levels of support need to hold. If they don't hold, the next level of resistance is going to be this trend line here. How do I Yeah, do I extend it to the right? There we go. So this trend line here would be the next level of resistance. But, you know, once we get there, we'll talk about it. Overall, it needs to hold this trend, hold these trend lines, and then break above 42,000 and hold above 42,000. If that doesn't happen, there's no reason to get into Bitcoin. I mean, unless, you know, you want to just buy something and hold it much longer term and you're not really thinking about it, sure. But otherwise, it's very, very, very risky, because we can still fall and break this bear flag to the downside and go much lower. So just be careful. Overall, I mean, it is a very good sign that, you know, Bitcoin is now oversold on the MACD, but we are oversold at support, which is a pretty bullish sign. So that is a pretty good sign. But yeah, we really need to hold above these levels. A few days ago, we were overbought at resistance, right? At these levels of resistance, I had, you know, 42,000 was an extremely important level of resistance, but we were overbought. So I said that, you know, we needed to cross above that level for me to become bullish again. We never did. We failed it. And now we're oversold, which is a much better sign. So yeah, just be careful on Bitcoin. Obviously, the same holds true on Ethereum. We still need to break above 2316 and 2341, but that won't happen unless Bitcoin sustains itself properly. And obviously, you know, same applies to many other altcoins as well. You know, Ethereum, XLM. Oof, yeah, a lot of them are taking a beating today. But yeah, there's my analysis on the crypto market in general. And now I'll go into the stocks that you guys wanted me to do technical analysis on. Starting with Apple. So Apple had a few great green days, obviously, because the Nasdaq was, you know, the winner. So obviously, with the Nasdaq being the clear winner of the 3 different indices, Apple clearly did very well, right? Because Apple is a $1 trillion company. It holds a lot of weight in the Nasdaq, so which helped bring the Nasdaq up. So as you can see, Apple is in a short-term uptrend, but we are overbought at support. So what might end up happening is we can fall back down to 128, 129 area on Apple. And if that happens, that would be a bullish sign. It would give more room for the MACD to cool off a bit, because we are overcooked currently on the MACD. It needs more time to consolidate. Similarly to what I was saying on the Qs a few days ago, we were overcooked. We needed some days to consolidate, and literally we're back at almost the same price that we were trading at, but now the MACD has much more room to go to the upside. So that also needs to happen on Apple. We need to consolidate around these prices a bit more, give more time for the MACD to cool off a bit, go lower, and if we can stay above 128 on Apple while the MACD gets oversold, that would be super bullish on Apple. A straight upward move on Apple is not good. Yeah, so I wasn't even looking at the B bands. We were trading outside of the upper level of the B bands, and we're still touching it currently. So we need to really cool off just a little bit, give more room to go to the upside on Apple. So I really think that it needs to go back down to 128 to 129 area on Apple. Ethereum Classic, obviously very similar to, you know, obviously if the rest of the market is not doing well, then these altcoins are not going to do well. In my opinion, if you are holding Ethereum Classic or any of these other altcoins, unless you're holding it long term, you literally don't care about the money, blah blah blah, I would sell. And I would sell everything, and I would wait for Bitcoin to either fall down below 30,000, and I would buy back into all of these coins once Bitcoin is somewhere between 27,000 area, or I would wait until Bitcoin is trading above 42,000, because right now there's literally no point of buying into any of these coins unless you're looking to accumulate long term. and you have the money to blow and you don't really care. All right. But yeah, overall, so just looking purely at Ethereum Classic, it needs to hold the lows of $40. If $40 doesn't hold, then that is very, very bad. I mean, it's already looking very bad. Bitcoin is at support, and everything is, all eyes are on Bitcoin currently. So yeah, that's my analysis on Ethereum Classic. Rolls-Royce looks pretty interesting because it is, as you can see, there is a large gap to be filled on Rolls-Royce longer term, all the way from between 254 and 331. So this gap needs to be filled. All right. And we are trading at a low. And if people were to look at the risk reward currently, you can look that, you know, we have support all the way down approximately at 131 with an upward target potentially at 330. So that 331. So those are pretty good risk reward long term. If you do have like the money to just throw away, this can potentially be a huge mover. Rolls-Royce can really, really potentially be a, you know, a big mover. So I would, you know, Rolls-Royce is actually like one of the stocks that I was looking at if we were to have like a bounce, because it's literally, it was trading at its lows. So yeah, and currently right now it bounced off of the 61.8% fib level at 151, which is a very good sign. And as you can see, the MACD is very oversold. So we're oversold at support. 151 held really nicely, which is the 61.8% fib level. And this is essentially a bull flag. Ooh, sorry. This is a bull flag. And this looks very nice. So yeah, now if we just cross above, we can see, purely based off of this move here, we can see potentially a move all the way up to 180 to 175 area, potentially, if we do cross above this bull flag line. But overall, Rolls-Royce looks pretty good. If you do have money to just throw away longer term, this is also a pretty good stock potentially as well, in my opinion, but I'm not your financial advisor. GLDL, it's a Canadian stock. It held support at 24 cents very well. We can see that it had a green day, but one green day made it extremely overbought on the MACD, which isn't a good sign. So if we reversed and had a green day while the MACD was still oversold, that would be very bullish. But the fact that a small little green day caused it to shoot up above the MACD is a it's kind of scary. What could happen in the short term is I do think that we could bounce up to 32 cents. But, you know, overall, this is also a very illiquid stock. It doesn't really get that much volume. So there are better stocks to trade other than this stock here. But 24 cents needs to hold. That is a support. We can go to 31 or 32 cents. But be careful because the MACD is overbought. And if we cross above 33 cents, really, then we can go back up to 40 cents. But just be careful. And if you haven't bought in already, I would wait to try to buy closer to either 24 cents or 26 cents. LKCO, ridiculously bullish move. This is awesome. Congratulations to everyone in LKCO. This was great. So we created a bull flag. We retraced back. Look, this is probably a... Look at this retracement. Hold on. We retraced back down to the 61.8% fib level. Textbook. We bounced off of that level and we broke above the trend line, or the bull flag, which is literally textbook. Beautiful move. So now if this continues, right? So if we draw this from here to here, drew it like this and like that, and we're breaking out. To get an upward target on LKCO, you would take the length of the flagpole and drag it to the point of breakout. So approximately 270. LKCO can go to approximately 270 based off of this move alone. So, and it also looks like it may happen potentially because it barely moved on the MACD. The MACD is still flat, but we had a huge green day. You understand? So look at this. The MACD line flat, whereas on GLDL crossed above. You get it? So this is the difference of like a very strong stock. The fact that we didn't even move upward. We didn't even move upward yet on the MACD, but we had a huge move upward and broke a recent high. That is extremely, extremely bullish. So on LKCO, overall, that is ridiculously bullish. 223 needs to hold in the short term. But overall, this looks really nice. It can go all the way up to 270. Yeah, LKCO looks very bullish. We broke out of a bull flag and we have crossed above the point of the flagpole. So that's really nice. But the level of resistance that we still need to break above is 238. We closed at 237. So, 238, we still need to cross above that and close above it for it to be a confirmed break of this bull flag. But it looks very, very nicely. HEPA, very similar. So you can see that the MACD just barely it crossed down into oversold, but the formation on the candlesticks is extremely bullish, which means that this is a very, very bullish sign on HEPA. So 212 needs to hold. If 212 doesn't hold, then the 38.2% fib level is $2, which is still extremely bullish because this is a bull flag and it looks like it's just consolidating. It was extreme. Look at this. Look, this is beautiful here. We were extremely, extremely overbought on the MACD right here, right? Everyone was thinking that we were going to fall back in below $2 and it was going to look very bad. The price of HEPA created a rectangle and consolidated within the rectangle, and the MACD ended up cooling down completely from this very overbought position and now became oversold, which is very, very bullish. We so essentially $2 needs to hold on HEPA, and it'll end up giving, if we bounce off $2, the oversold position will end up becoming even more, and that'll give way more room to the upside. So overall, HEPA also looks pretty bullish. We just need to continue watching $2, 193, and the 0.618% fib level really at 184. So anything above 184, still pretty bullish on HEPA. So SNDL, obviously it's not as bullish. We crossed below the 61.8% fib level as we were looking at the other stocks, but we're bouncing off of the 786% fib level at 89 cents approximately. So 89 cents is the make or break level for SNDL in the short term. We can see that the MACD is very, very oversold. So if 89, this is a pretty good level to buy at, in my opinion as well. But I'm not your financial advisor. 89 cents needs to hold. You would set a stop loss a little bit lower than 89 cents. But yeah, this would be a good time to buy, maybe, depending on how the other weed stocks and everything are doing. But this is a support level, a very, very important support level at 89 cents. So if this doesn't hold, then we can fall back down to approximately 75 cents, really. So yeah, overall, I mean, it's now or never. We're oversold on the MACD. We're closing in on the 70-86% fib level at 89 cents. And if we're gonna bounce, it has to be soon, or else this is going to collapse. We're also creating a falling wedge pattern on SNDL, which is usually a very, very bullish pattern. I've shown that a few times as well. Falling wedge patterns are super, super bullish. So if we do bounce off of the lower level of this wedge, it is approximately in confluence with, the 88 cent level. We can end up touching the lower level of this tomorrow, which is around 85 cents, and then end up bouncing and breaking out and maybe retesting over $1 on SNDL. But, you know, 89 cents and 85 cents really need to hold. And then if we break above, tomorrow the level of resistance that we need to break above is 94 cents. If we break above 94 cents, that can give steam to break above $1.02. And then from there, you know, hope it just continues on higher. But aside from that, there's my analysis for today. I hope you guys enjoyed the video. And until tomorrow, I'll see you guys. Thank you.